Everyone, I'm Latoya from at the Profit Room, providing you today's recap. Excuse any noise in my background. Virtual learning is in fact with the kids. Everyone, feel like this would be an awesome Friday recap, a way to close the week. In terms of recapping what occurred in the futures forex room along with our day trading equities. Also, we're going to throw some swings in there because they're very important to our overall direction bias when it came to what would have happened this week and to actually see it play out. That's all in anticipation based off of levels in the market. Let's scroll and get caught up. This is all NQ and ES and levels. Ernest really hammering on the point. We have so much content to upload with these live trades to post. Very great trade setups. Also, just follow our Instagram because the videos are always posted on there first. It's easier to post short clips versus the long-winded version for YouTube. So let's get caught up with ES. ES, just noticed that it was in the same trading range from the US Open. 9:30 a.m. until 4 p.m. That's when the US Opens occurs. And ES is the E-mini S&P 500 Index Futures. Whereas if you're trading on the equity side, you're going to think about the SPY, trading SPY puts. And I will discuss the puts I bought on this very same day, which you're going to see in the swing room, going into holding for this bearish move. All right, so knowing that ES is ranging, you have these areas where this becomes a sell area we cannot break above. It literally gets that simple, and I'm going to show you on a bigger chart how ES actually held support. So coming in today, you can see that we were very bearish. Ernest with his levels for NQ and also the target areas are very important because it's all about the levels. It's all about understanding how to arrive at levels, how to read a chart properly, and also understanding your overall trend. So very key. And I'm just going to fast forward a bit to the ES zone. So we provided a short today in futures forex room, as you can see, and look at where it rejected. This is the same area as was posted from last night, and we're going to dive in to see exactly how and where it bounced off of. Important stuff. All right, so let's now move on into the swing room because I'm going to discuss Facebook as well as Apple shorts. In particular, could have got the shares, could have got the options, it doesn't matter. When you short something, you're going to make money when the price of the stock falls. When you buy a put, it's the same concept. Remember, your options are not going to work unless the underlying security, which is the stock, Facebook and Apple, moves in that particular direction. So the vehicle of choice in which you decide to trade, if you decide to get the shares or options, is up to you, really and truly. So I usually do both for the sake of it. I usually get shares in an account and get the options in the other account. So it was great in terms of finding this or looking at how the market was doing midweek Wednesday and seeing how things were forming. We were bearish going into this week anyways, and Monday, as you know, the market did gap up. So it's just like, is this sustainable right now in the moment? Nice opportunities on Facebook and Apple. Apple was trading around the 114, 113 area when this post was made, and Facebook was right around $269, around there. Basically, Facebook dropped like a rock. We had a 250 target, so covered around $10 a share, and then you can see later on in the day got the 250 cover zone because Apple bounced off of 250 19 yesterday. That was the actual low for Facebook. Coming into today now to get rid of more or cover more of the Apple position, we wanted the 107 area. These are the retests. These are the take profit areas. Apple low today was 107.20. Now, these are swings, but also it's so fair game to also day trade it, right? We have different accounts for different objectives. Swings are working out lovely, and both days, yesterday being Thursday and today being Friday, we came in same objective. We're crushing Facebook, shorting it. We're crushing Apple, shorting it. There's no difference. Like, we know it's going to go down. We know there are key target levels, and our goal is to capitalize off of all time frames. So there's opportunities no matter how you look at it. And it was awesome. It was amazing. So let's dive into these charts. What you're seeing here right now, you're just seeing what I look at on a day to day. The only thing that's not included is one more monitor that's towards my right, that I have futures and forex up as well as the execution button. So not bad for today, 3,200. We had a great week. Yesterday was over 4 grand. 13,000 for the week so far. All green days too. So let's just focus in on this particular chart. We're going to dive into everything that you've seen so far in Slack, the thought process on the reason why we were so bearish going into the market this week. Ultimately, we thought the market would continue to fall, but look at Monday's candle. Monday's candle actually gapped above Friday's closing price. So it took the market up, but that was just short term. The market did hit a resistance. If I use my crosshair, you will see that it lines up. We did hit a resistance. We're looking at ES futures, by the way. So you can see exactly the thought process going into this entire week, really. A lot of our swing setups we have did not execute based off of this movement up because we're expecting that price to fall lower. But I can say this, I know they will execute shortly. So additionally, we provided 2 bonus swings on Monday since the original ones on Sunday did not trigger. And it's all based off of ES. ES, or we can just go to the SPY. It's the same thing, but one is futures and the other is traded on the stock exchange. Look at the SPY right now. Look at what we're seeing. Look at what's happening. We have a void in the chart that is getting ready to get filled. Let's go back to ES. All right, ES. Let's go to the 1 hour because this is where the zones I posted in our futures room, so you can see that the rejection of these areas very key. One thing that's important, and look at this, not only that we went back to the bottom of the zone, we're actually trying to close under the area. And I always will say this, whenever you're looking for targets, you got to simply just look left. Not right of the chart. Right is where we anticipating price to go, but we know our targets based off of just looking what happened in the past. So let's go to Apple. Now Apple, beautiful, beautiful setup. I'm just gonna go to clear it out to a naked chart so you can exactly see the same formation as the broader market, of course, right? This is one of the stocks that's a part of the index. You can see that it was sideways. No difference how we opened on Monday and ran into the same resistance, just like the broader market, and now we're coming back down lower. So our entry point in Apple was right here on this Wednesday's candle. Today's being Friday, we are in take profit zone and is going to hit my next level to stage left out of that swing position. Let's visit a 1 minute time frame so I can show you how we day traded it throughout the week. It was an amazing trade, just knowing the general direction of the trend was down. You see these classic key points. It's always about where price can break and just go. We just trend lower. yesterday opened around the support, so we exited our puts, most of the position, and the rest, well, we're gonna get out today because we're coming close to the area of control, in which I want to call it. So a good 60% yesterday around the open. I played it extremely safe because I actually went out to October's expiration instead of trading the weeklies, only because I did not necessarily know that Apple was going to really trend down this week today. You know, sometimes price action likes to consolidate before it actually moves, but hey, it was ready now. So if I were to do this week's expiration, my rate of return on my investment would have been much higher than currently is around 75 to 80% is okay. The point is you have to just get the direction right. So it doesn't matter if you trade the shares or the options. Just know that your options are not going to work out if your directional trend of the underlying stock doesn't go as according to plan. So you still have to be able to read a stock chart. Let's look at Facebook because Facebook was the same exact way in terms of our entry point. On Wednesday, nice bearish formations. Just look, we have strong selling pressure that occurred last week. We took a moment to rest and relax, like is what I like to call this, before we continued in the direction of the bears. They just taking control right now. Facebook have a 250 level as we can see here. And that's where we covered into yesterday on the swing side. Today on the day trading side, I just highlighted the entry points and where we exited the stocks. Very important. So you can day trade, of course, right? That's the whole purpose of capitalizing on movements now, today. And you can hold the swings. You don't have to sit in front of the computer, even though we don't sit in front of the computer all day, because we have key areas where we're exiting and also knowing exactly the levels. The levels are important once again. How are we going to go into next week is the question. Well, the way I'm looking at the broader market, let's go back to the future side. It looks comfortable on the way down. This looks like a great H pattern formation. I'm going to post a link in the description so you can understand exactly what H formation is. Is all technicals in terms of the formation and where can we possibly go when looking at the charts. I'm going to look at Amazon. Ernest provided a great analysis piece on Amazon. The reversals, I can see it with my eyes. Hopefully you can spot it too on this chart where the key sellers or the key sell point was at. Everything looks like the broader market right now in terms of this area right here before we ultimately push lower. Let's take a look at these puts that we took on Apple. These are October's expiration date. I literally just close it out. Apple actually hit my level, which is the around 106 area. I'm going to show you. So this is our Wednesday. Look at the Wednesday entry, right around $1.40. Right now, 325 that this is currently at. And these were once again conservative, very conservative in terms of the strikes chosen. So you do the math, this is about 100%. I'm also going to take you to Apple next week's expiration. These are the weeklies, so this is going to hammer in on that point exactly. Buying time versus not, versus not. Right now, you see it moved 105%. So let's say right now price is at 108. If you got in on Wednesday during that alert, it would have been around 32 cents. And based on that, that return would have been over 235%. So that's the math. That's the math on if you bought time and you went further out with your expiration date, or if you were big and bold and you just say, forget that, this thing is going to drop right now. These are next week's expirations. Please, it's good to make sure you take your time in doing your analysis before you jump into any trade based off of hype, okay? Don't chase stock splits, for example, thinking that just because the stock split is a great value. You have to think about, where is the chart? Where was the chart of Tesla? Where was the chart of Apple? And they were both in overextended territories to begin with. All right, everyone, take care, be safe, have an awesome weekend.